Good day, good day, good day, good day, guys. This is Kenzo, Xtrahot Forex. So today, actually, we need just to talk about like a trading plan, or actually, before we even reach trading plan, we can say trading discipline or trading discipline. Sorry, trading psychology, man. Trading psychology, or maybe let's say self discipline. Because those topics actually they actually link to each other. So when we talk about actually self-discipline, it's like self-control. Actually, in the market, I'm talking about the market, not something else. So, what is self-discipline actually, or what is self-control actually in the market? It's like to me, I can say it's a method or it's a method that you're going to use to follow your trading plan, whether it doesn't really matter if maybe things are good or the situations are not in your favor, but you still stick to the rules. You see, you're controlling yourself to follow those rules. So yeah, I hope maybe you understand. I don't actually, we can't go on Google and try to find the definition for that, but I think it's just quite straightforward. So I have a small summary here, so I'm just going to try to read that for you and try to explain that to you, because I think maybe it's a good thing, because sometimes it is difficult to trade without a plan. It's like running business without a plan. So without a plan, obviously just preparing to fail, because you don't know how much you're supposed to risk. You don't know how much you're supposed to make. So you just all over the place, and that is actually bad. So as I don't really want to make this video very long, I'll just try to go through this and try to explain some other things that maybe you don't really understand. So yes, this is let's start with the trading plan. So this is a quick outline of your trading plan. So what are your goals or your trading goals, and what is your trading style? Firstly, I think maybe you need to able to answer that. If you're not, obviously there's something wrong. Do you have trading goals? Obviously, this one, everyone have goals. Obviously, everyone wants money before anything, obviously. But we know very well that maybe you don't even have a plan to reach your goals, and it's going to be tough, trust me. So what is your trading style? Do you have a type of trading? Do you know the type of trading that you're going to use, or the way you're going to approach the market, or you're just all over the place? So from now on, just try to understand that you need to have a style that you're going to use in the market. So I'm just going to explain that actually going forward, so you don't really have to worry much, because I think everything's just straightforward, right? So let's go to the next point, which is trading routine, right? So the first point is saying time frame you will trade. Actually, what time frame are you going to use in the market? You don't just go on the market and start to use monthly, weekly, daily, 1 2 3. You don't even understand why you're changing the time frames, but you're just going up and down. What do you want to see on this type of a time frame? Is it a 4-hour time frame, or is it like a daily time frame? Daily, 1 day, it's like this. Daily time frame, or a weekly? What do you want to get from these time frames? Because I think they all say something in the market. Yes, we know that it's a bigger time frame, smaller time frame, but what you want to achieve with this time, a different time frame. So from your strategy, obviously you should have specific time frames that you're going to use, right? So the second one is trading sessions. Trading session. Currently here it's European session. Actually, our time zone is quite similar to Europe, so it means when the European market opened, actually that is called a European session. After 3, 3:30, whatever, it's US session. So you should understand that, okay, my strategy works very well on these sessions because I'm trading this and that. I hope you understand that. So we're gonna go to the next one, which is trading strategy. Trading strategy. I think this one is everyone wants to have the strategy. So, but do we understand what is a strategy? Do you actually understand what is your strategy? A strategy is actually the way you're going to do your things. It's quite similar to saying, let me just give you this example, obviously. On fashion, like if you like fashion, there is Gucci, there is Louis Vuitton and stuff like that. They have their strategies. They use different materials. They use different styles. That is their strategy. They can't just copy Gucci or something else. You see, if we talk about shops, we know how Pick and Pay looks like. That is their strategy. We know how their shelves look like. So if you compare that to Spar or something else, you're going to see that, their strategy is actually different. The way they approach this thing, they might be selling the same thing, but they look different. Then it means even your strategy should be different. Actually, it should be something that it's going to relate to the way you trade. The sessions, the instrument that you're going to trade, they should make sense. So trading, where we are actually trade. Okay, we were on trading strategy. So first point is setups, trades you will enter. Setups, actually we're talking about what is the strategy that you're going to use. You're going to draw the trend lines. You're going to use moving averages, RSIs, all those things. So if you know what you're going to use, obviously you're not going to mix things up. So everything that you're going to do there is going to be clear. When we say it's going to be clear, we're not saying that you're going to win every day. You're not going to win every day, obviously. But it's going to be much better because you know where you're going. You know how to approach the market. You know when it's time to wait and stuff like that. So, number 2, it's a market you will trade. Example, gold, NASDAQ, currency pairs and stuff like that. You should know the pairs that you're going to trade in the market. Don't just say, I'm going to trade 7 pairs. They told me about the major currency pairs, the New Zealand, the Australian dollars and stuff like that. No. Focus on few. Let's say, firstly, you can focus on one pair. It doesn't matter whatever the pair, but just focus on one thing. Try to master that and understand how it works before you can even try to trade 2. You see, so make sure that you understand the pair that you trade before you even move to adding gold and oil, because that people, they just like to see making money. They just want to make money. Hey, relax, because you can still make money with gold, currency pairs, NASDAQ and all those things. So what's the point of trading 10 if you can still make money on NASDAQ or something? You see, or it doesn't really make sense because they all make money. You can sell snacks and still make money. You can sell whatever and still make money. So, but our approach is different. But the different there is our strategy. I know NASDAQ, you know currency pairs, you know this, you know that, you know that. Hope you get the point. The second one, or the third one, or the fourth one, whatever. This thing is not like actually in an orderly manner. English, guys, is not our mother tongue. Sometimes these words just go. So money management, actually we can just call it risk management. When we trade, guys, we need to be like extra here when we do the money management thing or risk management, because with if you're not going to master this point, actually it's going to be difficult on your side just to make money. You can make profits today or 2 days in a row, then you lose everything only with one signal, because you actually don't have this thing called money management or risk management. So this is going to help you actually to accumulate your profits if maybe you're making profits. So let me just go straight to the point. Risk per trade. How much you want to risk per trade? How much are you willing to take as a loss? How much are you willing to give the market if the market goes against you? You should know about that, right? So you should know that, okay, this day I'm willing to risk this much. But you can prepare that for the whole month and say, this month my account is this much. Every trade that I'm going to take, I will be risking this much, right? So stop loss method. This is actually how you're going to plan your trades when you take those trades. Actually, how you plan your losses. If maybe you get into profit, what do? You wait for the stop loss to, or you maybe trail the profits. You should understand, but this stop loss thing here actually goes with the lot size. You should understand your loss sizes, and this is also going to help you to understand the amount that you're going to lose. You don't just say trading, there's no stop loss, there's nothing. Yes, sometimes it's good to trade without a stop loss, because most of the time the market will then bounce back and go in your favor, but not every day. Or maybe unless if your account is like seriously big, then you can do that. But if it's not like that, trust me, you're still going to, the market won't play games with you, right? So profit targets, how much do you want to make from the market? We all have these goals, right? Money goals and stuff like that. This thing, I think it's also something that messes our emotions, because we all have this type of targets that we want, and most of the time, our targets are like seriously crazy high. You have $10, but you want to make $1,000. Is that possible? Yes, it's possible, maybe over time, but people, they just want to make that within a day, within a week, yeah, you can do that, but that you just actually put yourself in a corner, and then everything's just going to be like seriously difficult, and you'll end up actually over risking because your target is crazy. So the best way I can say, master your risk, master your lot sizes. Whatever that the market is going to give you there, it's just bonus. Don't actually try to fight the market to give you anything. Don't say, today I'm willing to make $10, tomorrow I'm willing to make $20, because you don't really actually control the market. So this point is very important, because most of your emotions, they're just going to come here, and then mostly you're going to mess things up, because if you miss your targets, you will feel like maybe you are not a good trader. But you are, as long as you can master your risk management, if you don't really lose much in the market, right? It's like you can be a good shooter. Let's say maybe in a war, or maybe something like that. You can be a good shooter, but can you survive? So if you are a good shooter but you can't survive, it's useless, because one mistake, they shoot you're out. Then tomorrow you're no longer there. But what if you can increase your protection? When they shoot you, you already have a bulletproof. You already have everything you're supposed to. Then you can survive, and it means you can actually shoot or kill more as you will be surviving. So actually, this is a secret. Sometimes it's not like to be like seriously good in the market. It's about staying longer in the market. If you can stay longer, today you lose, tomorrow you hit a home run. As long as you can master that risk management, you're good to go. Minimum risk reward, I don't really like this. I'm not going to talk about that. I hate this risk reward thing, because sometimes people, they just say, I want to make, I'm going to say, I will be risking maybe this much just to make, let's say 1:5 or 1:3. It means you're risking one, maybe that one ratio actually, maybe you're risking 50% of your account trying to make what? Maybe $150. When we talk that on the paper, that risk ratio is 1:3. That's great. But when we check that on your account, you find that actually you're overloading that on your account. Maybe your account can't handle that, you see. So that is something that is the term that I don't actually like in the market. So I rather use quite simple terms and say, you know what, I'm willing to lose only $20 because my account maybe is $200, and I know that if I split this $20 from this $200, I can able to trade how many times? Maybe 20 times or 40 times, something like that. Not just saying risk ratio, percentage wise, those things, yeah, someday like that. I don't really like that. So you should have a method of actually exiting on or out of the market. How are you going to get out of the market? Are you going to trail your stops? If the market keeps pushing up, are you going to trail? Are you going to they call this what? Scale up. Are you going to open more positions or something like that? Or maybe are you going to wait for the market to reach your target? If you have, like, let's say maybe $100 as your daily target or your trading target, that is actually bad, I think. So just accept whatever the market is going to give you. If you see that the market is no longer pushing up, the market is now consolidating, just get out. There's no point for you just to hold. Then you will end up losing. So I think as long as you are in profit, I think the best advice is to lock your profits or close your profit. Easy as that. We're going back again. This is just quick explanation. I will just read this as quick as possible because I did not actually want to make this video very long, but I know maybe this video can help someone. So trading routine, actually this is this trade formed on my time frame? Trading routine, this is the first point. Is this trade formed on my time frame? As I told you, don't just use monthly time frame, day time frame when you don't really understand, right? So is this trade during my trading session? Sometimes if maybe you trade US session, on UK session, mostly the market will be consolidating, for those who don't know. But when you know that, oh, I'm not supposed to be participating in this type of a market because it's consolidating or it's ranging. I will wait for US open, then the market will start to move, maybe with trends, and then that you can just make something. I hope you understand that. So is this trade formed in one of my markets? Actually, we're talking about the pair that you trade in. You might see a very nice pair, a nice structure happening on USOIL, but the question is, do you trade that? No. But you feel like it's better for you to test that? You're gonna lose. If you follow this, actually, this is going to help you to have a better discipline, because whatever that you're not going to follow, if you don't follow any of this, it's going to be easier to say, oh, I messed up because I did not follow this. This should be a sort of like your journal, in your journal actually. So let's push to the next one. Trading strategy. Does this trade meet my trading setup rules? Example, trend line setups, moving averages, breakouts, RSI, overbought, oversold, stuff like that. Does that actually meet your trade setup rules? Yes or no? If it's no, why are you participating in the market? Relax. So is there a valid trade entry? In my class, we have some structures that we try to identify before we can say, okay, now I can have a buy or a sell. For example, there are some they use candlesticks, patterns actually. Some they use candlesticks patterns, and yeah, mostly it's just patterns or structures, the head and shoulders, stuff like that. So yeah, I don't actually use that, but there is some structures that I use actually in the market. If they meet my rules, then I take the trade. If not, I just wait. I'm not forced to trade. So remember, it's not like every day is a trading day. You can take maybe 1, 2, 3 days without even trading, because unless if you're focusing on 20 things, obviously there must be an opportunity somewhere. Some you're going to lose. But if it's one thing, you will be forced to wait sometimes. You will be forced to wait because the market might be consolidating, the market might be doing this and that. You see, so you just have to relax. Another thing is, when you have skill, it's not like maybe just because you know how to analyze gold or something else, it means you need to trade those things. You see, you don't need to. If maybe you know how to do something, it's not like you're supposed to have them all. One is much better than actually more. So money management, am I risking correct amount of my account? You will answer that for yourself. If you're risking 50%, you will know that no, that it's not really good, because you end up trading twice only, but you wanted to trade the whole month, so that's seriously bad. Stop loss method correct. Are you using like some seriously crazy stop loss? Are you losing more? You're not supposed to lose like that, you see. So which means that's not really good. That's not really good. Try to master your stop loss. Try to master your lot sizes, by the way, and then your stop loss should be good. It shouldn't be far. Actually, it should not actually be far. So it should be on an area or where actually you're willing to take the risk. Profit target my method correct. Profit target method correct. Are your target actually seriously far, or maybe you just like you don't get enough? You just want to take everything from the market. Remember, the market doesn't really owe you anything. So whatever the market gives you, whatever the market actually gives you, even if it's $2, I just take it. Why are you waiting? You see. So is the minimum risk reward achieved? I don't really like that. I'm not gonna talk about something that I don't really like. So I think this video is already very long already. So yeah, I hope maybe this is going to help. So thank you very much, guys. This is Kenzo Xtrahot Forex. Yeah, we'll meet later on our not daily analysis, but on our live session, YouTube live session later on. So if not, because there is always power, whatever, it's fine. So yeah, we'll see. Thanks. Bye.